Hey there, Tiffany Thomas with WealthyTiffany.com, and in today's video I'm going to show you exactly how much you really can make in the stock market. As I showed in my last video, you could become a millionaire in 8 years by investing in one stock just at the right time. And while none of us can time the market perfectly, we can still benefit from time in the market. And that's what I want to show you today. I'm going to go over a number of different stocks and the amount that you could have if you would have invested in those stocks just 10 years ago. And then I am going to show you another way that you could invest your money to still get a really good return on your investment. So if you are ready to dive in, hit that like button and we're going to get started. Okay, here's how I have set this up. I've chosen 10 different stocks that we are going to invest in. And the way I've chosen these stocks is by choosing companies that are really popular, that have been on the stock market for a really long time. So they're not any abstract companies that are brand new and hardly anyone has heard of them. These are companies that we probably all use their products, and anyone could invest in these stocks. And I've set it up so we are going to invest $10,000 into each one of these 10 stocks, and we're going to be adding $400 each month to each stock. So a total of $100,000 at the beginning of the year, plus $4,000 each month. And that might sound like a lot of money, but I just want to give you an idea on the return on investment you can get when you invest in the stock market. And we're going to hold these stocks for 10 years. So I just wanted to show you our total investment after the period of 10 years would be $580,000. That's how much we're putting in to these investments. So for each stock, we are investing a total of $58,000 because we are starting out with $10,000 for our initial investment for each stock, and then we are adding $400 per month to each stock. So when we look at these totals, you're comparing it to our original investment for each one at $58,000. All right, the first stock is Disney. And if you would have invested $10,000 plus that $400 each month, starting in April of 2010, ending in April of 2020. And the days on these are going to be a little bit different on some of them. For some reason, the calculator wouldn't allow me to put in my exact day that I wanted, but you get the general idea. So the total we would have received would have been $112,392.02, which you can see at the very bottom of this screenshot, which is an annual return of 10.97%. So not too bad. Let's take a look at the next one. This one is Dollar Tree. It's the dollar store you can buy items for $1 at. And this one, if we would have invested that $10,000 again and then $400 for each month, we would have had a total of $109,567.42, which is an annual return of 10.56%. So not a bad stock. The next one is Coca-Cola. Maybe you like Pepsi better than Coke, but I chose Coca-Cola. So this one we would have had a total of $96,372.94, which is a little bit lower than the other two at 8.47% for an annual return. The next stock that I chose is Lowe's Corporation. I've been going to Lowe's and Home Depot quite a bit lately to fix some stuff at my rental properties. This one would have given us a total return of $151,771.04, which is higher than the others at 15.81%. The next stock is McDonald's, one of my nieces and nephew's favorite fast food restaurants. This one would have given us a return of $130,996.11. So this one is a 13.44% annual return. The next stock is Procter & Gamble. And if you're thinking, Tiffany, I don't think I've heard of this one. You probably have. They make a lot of household products like Head & Shoulders or Secret, Charmin, Vicks, Oral-B, Scope, Pampers, Febreze, all sorts of stuff like that. So if we would have invested in that stock, we would have a total return of $109,830.87, which is an annual return of 10.67%. The next one I chose is Bank of America Corporation. I have one of my mortgages through Bank of America. Now, they would have given us a return of $95,312.50, which is an 8.3% annual return. The next stock is Chevron. Maybe you buy your gas here, or maybe you stick to the cheaper gas station, Maverick. But if you would have bought their stock, they would have given us a return of $62,502.13, which is an annual return of 1.27%. So not that fantastic. So you can see the risk of investing in individual stocks. But we're going to come back to this after I finish showing you the other two stocks. The next one is JP Morgan Chase & Company. Maybe you have a Chase credit card, that would be this company. They would have given us a return of $121,238.50, which is a pretty good return at 12.17%. The last stock I chose was Walmart. I know a lot of people that like to shop at Walmart. They would have given us a return of $119,725.61. So almost a 12% annual return. It's 11.99%. So the money we would have made by investing in these 10 stocks for the period of 10 years would have been $529,709.14. And our original investment was $580,000. So $58,000 per stock over the period of 10 years, which means we didn't quite double our money, but we came close. Now what I want to show you is if we invested that money in an index fund instead of buying these individual stocks. And the fund that I chose was the Vanguard Total Stock Market ETF. So this is a fund that tracks the total US stock market. So if we would have invested all of our money into this ETF instead of in individual stocks, we would have a total of $1,051,648.99. So a little bit lower than investing in all of those individual stocks. Still a really good return, and we wouldn't be worried about choosing individual stocks. So this scenario shows that you could earn more money if you were to invest in about 10 different individual stocks versus one fund that follows the total stock market. But this may not always be the case. There are stocks that you can purchase that would have grown a lot more than the stocks that I gave in this example. Or you could have chosen stocks that wouldn't have grown as much as I showed in this example. So it is a risk to invest in individual stocks. I like to do it, but I also like to put some of my money into a fund or index fund that I don't really have to watch. Whereas I'm watching my individual stocks and I don't check them every day or anything like that, but I keep my eye on the companies I'm invested in, because if they start to become a different type of company or they don't seem to be keeping up with what's going on in the market, then I need to sell those stocks and put that money into a different investment. But I kind of just wanted to show you this fun example and show you how much money there is to be made in the stock market if you do it smartly. In comparison, I want to show you if you were to leave your money in a savings account. And my savings account, I use Ally, A-L-L-Y. They have an interest rate for their savings at 1.5%. So that's what I did my example for, because I'm going to assume that you are very smart, and if you are keeping money in a savings account for a long amount of time, that you have it in an online savings account, which is going to pay you a higher interest rate. So looking at this example, for a 1.5% interest rate, we would have a total of $634,350 at the end of 10 years with our same investment amount. Take a look at that comparison. You can have over $1 million. You can be a millionaire, or you could have just over your original investment. So really think about this example when you are just leaving your money sitting in a savings account instead of putting it into some type of investment, whether that is the stock market, like I showed in this example, or into real estate or some other type of investment. We really need to invest our money to help us become financially free or retire. We won't be able to do that unless we are investing our money. So it's really important that you do that. So pick the way that works best for you. If you like individual stocks, then buy some individual stocks, choose some good companies. Or if you want to be more hands-off, you have no desire to invest in individual stocks, then pick an index fund or an ETF to invest in and continue to invest your money over time so that you can retire when you want to. Hopefully this has been helpful and you can actually see the return that you could receive on your money if you're willing to take some risk and invest in the stock market. And you can do it your way. You don't have to do it someone else's way and invest in really risky stocks, brand new companies. You could choose a few individual stocks that you're interested in investing in, and maybe choose a fund that you like as well. So it doesn't have to be super risky, but leaving your money in a savings account is what's risky because you're not even keeping up with inflation, which is about 3% per year. So you're maybe earning that 1.5% in your savings account. And by just choosing to get started investing, you can have a much higher return on your money. And you don't have to keep your eye on it every day and go crazy by watching it go up and down all the time. You can just continue to invest over time. Just add to your investments and be consistent with your investing and then see that return over time. Comment below and tell me what your favorite stock is. I'm curious to know. And if you found this video helpful, please hit that like button and share it with someone else who would like to hear this information. And please hit the subscribe button to subscribe to my YouTube channel. That will really help me out and we can get this content out to more people. And don't forget to hit the little bell to get notified on when I post new videos. And if you are interested in getting 2 free stocks, since we were just talking about stocks, Webull is doing a promotion. If you open a free brokerage account with them and deposit at least $100, you will get 2 free stocks. So I will leave my referral link below. You can click on that to get your 2 free stocks. Thanks so much for watching. I'll see you in the next video.